massive demand for rental property. Landlords are still going to reap the rewards from that and have choices and have options what they do. I think inflation rates for rentals are going to continue to be around 7 or 8%.
There's loads of tenants. Whilst rents are going up, whilst property prices are pretty stable and interest rates are coming down, you would imagine landlords would buy in. All indicators point to a pretty safe place to put your money. The world and the media don't want you to do that.
They've made it really difficult for landlords to either stay landlords or to buy properties as landlords. The way that the UK has gone to try and make it more affordable for first-time buyers, what they've tried to do is penalise landlords buying properties and holding on to properties, and they've tried to use that as a way to get more first-time buyers into the market, and that has happened and that's worked. It's made rent skyrocket. Welcome to the Investors Corner podcast. We are going to go live. This is a big one. This is a special anniversary. What do you get if you had 50 times 3?
150?
150. That is the episode. Didn't need Google for that one. Did not need it. Did not need an education for that one.
No, absolutely not.
So
150
episodes. 151 if you include the intro. But we didn't want to be, I guess, bad from our point of view and say that we did 150 when we didn't. So the intro, if you're looking on the podcast, it may say 151, but it's not. We're going to go with the 150th. So I remember the first time we created this in Regis, we had a couple of these funny little mics on the desk. It wasn't all this sort of set up in a fancy podcast room. But the origin questions that we always asked a guest was, what do you think is going to happen with the property market in the next 6 to 12 months? What's one piece of advice that you would give a property investor if they were sat next to you today? And what would be the perfect buy-to-let if you were going to buy one tomorrow? They were the 3 questions that we, especially in the first 50, 60 episodes, we always asked a guest. So I thought, let's bring it back to that and use this celebration to kind of, I guess, reflect on 150 episodes, what we've learnt and what we would say now. And I'm sure we could pull back the old records and see what we said back then, but we won't do that and embarrass ourselves because the hairline's changed and it's probably an awkward set of audio and it might get us pulled off Apple. So let's dive into that. So Andy, I'll go to you first. We touched on it a little bit on the last week's episode on the market side of things, but just generally speaking, property, the rest of 2024, do you think there will be much changes in the rental kind of market with tenant demand, with landlords potentially selling more than they're buying? Is that going to just carry on, or do we think the base rate change and interest rates dropping is going to have a bit of a kickstart?
Yeah, I think if the base rate comes down and mortgage rates sort of decrease like they have been recently, then I think there'll be more confidence in the market for landlords to potentially either add to their portfolio or for new people coming into property investment to actually buy those buy-to-lets, because financially it'll be more rewarding for them. With tenant demand, again, I'm sure there's a lot of tenants out there that are becoming more confident with mortgage rates and potentially looking to buy a property for the first time and come out of rented accommodation, which will then free up more property to come onto the market, which will have an easing on the supply issue. But I just think that there's still going to be that imbalance there. I think if we look at the demand currently for rental property compared to supply, we're still sort of around 25 to 30% out, really. So it's still going to be massive demand for rental property. Landlords are still going to sort of reap the rewards from that and have choices and have options of what they do. I think inflation rates for rentals are going to continue to be around 7 or 8%. So again, it's good for landlords. And I suppose we have to see what Labour introduced that affects landlords as well. You know, there's a lot of talk out there, nothing set in stone yet. Landlords may lose more confidence than what they have done recently. So yeah, it's a bit sort of up in the air really on the rental side of things and letting side of things, tenants reform and all of that sort of stuff. But from the conversations I'm having, from what I'm seeing coming in, like I said on last week's episode, we're not really losing a lot of landlords to selling their properties. If anything, I'm speaking to landlords that are looking to increase their portfolio size or looking to keep hold of their property for at least another sort of 2 to 3 years. So for me, it seems okay. Seems like it's going to go in the right direction.
And would that have been a different answer 3 years ago, 150 episodes ago? Would that have been a different answer, do you reckon?
Well, I mean, 3 years ago, we were still in a sort of hot market for lettings. If anything, there was more properties in the market on lettings. But I think that we've seen the headlines recently, haven't we, that you've got those landlords that are coming up to retirement age, 160,000 landlords exiting the market because they're at that age and they want to release that equity and go and do something else with it. So if anything, there was more supply then compared to now. Rental prices probably a lot different back then compared to now as well. Probably seen a massive increase on what rentals were achieving. So if anything, I think it's a better market now than it was 3 years ago. Apart from obviously cost to landlords with mortgage rates increasing compared to 3 years ago.
Any evolvement on that, Mike? What do you reckon? Next kind of 6 months, let's put it down to that sort of timescale.
Well, the way I look at it is almost the attitude towards being a landlord, which is probably false, but it does then drive what happens over the next 3 years, because the vast majority of people very rarely do something that is unpopular, and it's got an unpopular narrative about it. So whilst there's loads of tenants, whilst rents are going up, whilst property prices are pretty stable and interest rates are coming down, you would imagine landlords would buy in at that point, because all indicators point to a pretty safe place to put your money. But the world and the media don't want you to do that. So if you're a reasonably uneducated property investor, and we've talked about it probably for the last 3 years, is get an education on it. Realistically, most people are uneducated investors. It's hard to swim against the tide of how negative it is and how apparently the Labour government are going to destroy you for being a landlord at the moment. And that's the piece really for me, is what are they going to do? Are they going to do anything? Because there's we're on a knife edge that if they chase landlords out of the market, they've got a real problem, real big problem, right?
Yeah.
It feels like that's been happening for the last few years, like with Conservatives. Like, it feels ever since the stamp duty 3%, and then.
But it's been a slow creeping.
Yeah, it's been done subtly.
Yeah,
but it's still. That's what's happened over that period of time since then, is they've made it really difficult for landlords to either stay landlords or to buy properties as landlords.
Yeah.
I think that's just the way that the world has gone, or the way that the UK has gone, to try and make it more affordable for first-time buyers, and there are tenants that are out there. And as a result, what they've tried to do is penalise landlords buying properties and holding on to properties, and they've tried to use that as a way to get more first-time buyers into the market. And that has happened and that's worked. But what it's done, as we've mentioned before, in this backward sort of way, is it's made rents skyrocket, which mean those first-time buyers that are tenants are now finding it really hard to save deposits, finding it really hard to pay their rents, and rents are just so high in sort of perspective of where they need to be to pay their rent and save enough to become a first-time buyer. It's become counterproductive in most cases, which is why Vez said to us on his episode that the Bank of Mum and Dad is the 4th biggest lender in the country.
That's because the wealth is held by
the 60-plus group.
The 60-plus group who have gone through that period of incredible change in the housing market. There's been two two articles, two pieces of news which have kind of interested me whilst I've been supposed to be on holiday. The first was a chap from Generation Rent was on the BBC News and said you can tax landlords more, you can penalise them more because they're all rolling in it, and they will make so much money that a little bit more isn't going to hurt, which is just incredibly uneducated. You know, that's just purely just vitriol rubbish being spouted without actually looking into what your average landlord, who is a 40% taxpayer, has.
Yeah, what they actually give back.
How it actually works. And the other was the head of corporate at one of the biggest estate agents in the UK that has bought something in the region of 100 letting agencies over the last 5 years, said buy-to-let is dead. So traditional landlords are now out of the market, and it's all about professional company investment built to rent assets, which was kind of ironic from his point, where his company have spent the thick end of £250 million on acquiring letting agencies. But it was interesting for them to come out head above the parapet and just say, do you know what, that part of our business is rubbish.
Yeah.
And it's all about this now.
People like to bounce around, don't they? They get an idea, especially strong kind of dictating type people, which someone like that potentially is in that level. is they get this idea, and then it's because it's their idea, everyone else
is right.
Yeah, everyone else has to sort of bow to that idea. I think something
there's often a nugget of truth in and around the alpha bullshit, though, right?
I did see the guy on BBC, and I did laugh at the information that he was spouting, thinking, "Wow, you are so wrong." How they got them on there, I have no idea. But I think one thing that probably I would say for landlords, you know, the everyday landlord that's out there, or maybe someone that wants to be a landlord, wants to be a property investor, that maybe isn't 60, 65 years old, that is 40, 45 years old, you know, that is now got some decent equity in their property, they've got some savings, and they're looking at, right, do I invest in property? I think the one thing that I've felt personally over the 150 episodes that we've done that's changed my mind is I think you should be investing at the moment with good chunks of equity. I would probably feel uncomfortable buying a buy-to-let tomorrow with less than 50% equity, which I wouldn't have felt that way 5 or 6 years ago.
And that's a real north-south divide, because we go back to the Red Roots episode with Steve Gear, who's obviously a successful agent in West Yorkshire, and he was talking about all his investments and the gearing of his entire portfolio, and he could see mine and Andy's eyebrows coming off the top of our head, and he's like, "Why? What's the problems? Well, we can't buy that down here with that gearing. Why not?" So that's a real north-south divide point, which is a great episode to go back to.
Well, I think it's, from my point of view, I think it's because the risk of seeing what goes on with the mortgage rates, you know, has been heightened in the last 2 years. And I think, will rents stay as high as they are forever? I don't know. Will there be some sort of cap put on it? We spoke about the Scottish market. You know, will there be some sort of regulatory cap put on rentals that then mean that margin swings? And also having the ability to actually do something with the equity, or have control of, is that just an untouchable asset, or is it an asset that's still got flexibility? And if it's at 75% loan to value and it's sat there, it's pretty much you either sell it or you leave it. There's not much else you can do with it, right? So, but if it's sat there and it's 50-50, then you've got the ability to repay on the 50% worth of loan. You can stockpile a little bit of the rent to the side and use it at the end of the year, or refinance, and maybe if prices go up 10%, then you can pull 10% out and still have 50. It's a bit more flexible. It's got a little bit, it feels a little bit less sort of static with what you can do with it.
Bit more in your control.
Yeah, I feel like, maybe that's the control freak in me, wanting the sort of balls in my court. But that's probably something that I wouldn't have looked at before. But maybe the market is that way now. Maybe you're kind of looking at it thinking, well, if the market in the next 3 years climbs by 2.5% a year, you know, in terms of average house price, well, then that seems more sensible to me at the moment. I think the other flip that I've probably worked out and learned in the 150 episodes is there's a lot of power in having the cash. And I think sometimes you can't have that power on your own. And you're talking about companies there, but not necessarily companies, but just 2 or 3 like-minded individuals that you trust coming together with 200 grand each, for example, or 2 or 3 businesses coming together with 250, 300 grand excess cash that they could put into it. There's a lot of power in that, I think. And if I was looking at what I would do to get on the ladder as a property investor for the first time, I would consider who I know in my network that I could potentially do something like that with, which maybe 2 of you have got cash and 1 of you's got skills, you know, so that there's a nice blend there.
Yeah. I mean, if you looked at like Peter Licorinos in the HMOs, you know, he's got a handful of investors that he works with to buy these bigger properties where he gets, I mean, the returns that he gets, I mean, what's it, £1,000 a room gets on his HMOs. So the returns on that, if you're putting money into that investment, into bigger properties as well, where it's going to be worth more further on down the line, and you're reaping those rewards rental-wise as well, like you said, that seems to be the way that potentially first get on that sort of ladder, working with someone like that, with those like-minded people, and progressing from there, and then looking to potentially do it on your own at some point if that's what you want to do. But yeah, I totally agree with you that working with people,
I think it becomes a little bit less personal when you do it that way as well, which is not a bad thing. You can see it with a bit more business strategy. We obviously had a different Peter Laverdos, on a couple of times as a business coach, and that's probably a strategy that's more down his line. In fact, I think he might even be doing that with a trade guy in joint ventures. And that seems a bit more sensible to me at the moment with how things are, as you leverage some of those skills, because things cost a lot of money. You know, they do cost a hell of a lot of money, but if you've got the right contacts, things can be done very, very well. And there are deals available. There's a guy that called into our overflow yesterday, and it came through as an email, and I couldn't work out where the address was, and the address was a property in Bournemouth. So I rang him to work out what was going on, and he just got confused between 2 properties that he was looking at online, and the one that we had was in Slough. So I was like,
obviously,
what's going on here? And worked out, obviously, the chap's an investor that's looking up and down the country at things that stack up for him and his business partner. And they've got a formula, if you like, or they've got a plan of what they're looking to buy. And it just so happened that one was in Slough and one was in Bournemouth, but it made no difference to them in location. Obviously, the locations have got part of the formula in them, Bournemouth and Slough being 2 big entities. But I was like, yeah, that makes sense to me, you know, because you've got the idea, you've got what you're trying to do, and that kind of makes sense. So I think there's a lot of lessons that we've learned over that 150 episodes. And I think in another 50 episodes or 100 episodes, we'll probably find that those lessons and the market's shifted a little bit, and we'll be looking in a different way. Asking you guys, I'll go to Mike first on this, but what would be tomorrow? Because it's one of those 3 questions we always used to ask. What would be the perfect investment if you were going to buy something tomorrow? What would you say?
What would be the perfect investment if I was to buy it tomorrow?
Yeah.
What would be the perfect investment if I was to buy it tomorrow?
How much you got? How much?
I mean, money doesn't necessarily need to come into it. I guess we can leverage that, but
I think looking at what a lot of people are doing, and bigger investors are doing, is something with potential, something where it's maybe a split use, maybe a bit untrendy at the moment, on the edge of a high street where value can be added or development can be done. because it's very expensive to do building work at the moment. But it's not always very expensive to do building work. So if something's got the potential, the flexibility to change, that's what I would have more interest in than your 2-bed flat, 4-bed house, etc., because it just gives you the option that if buy-to-let does get absolutely vilified, well, you have a building that could be a dentist surgery, a vet's, a office, a whatever, in the future. So something that's got, and it doesn't have to be one of those 3 or 4 things. It could be a house on a main road, because that's where a lot of those places are. But you can convert something into a commercial building and get a commercial rent for it instead. And then convert it back into a residential building if you're looking to sell it. So something that's got a little bit of play in it would be potentially, if I was just given money to go and put on red or black, that's where I put it.
Andy, anything different to that?
I think for me, my investments would be into the 2-bed terrace or the 3-bed semis. I just think, and in specific sort of community areas with schools nearby, shops nearby, because I just think that they're always going to be a high in-demand property for potentially first-time buyers or small families, and then you've got them looking to upsize to 3-bed semis. I just think those types of properties, they'd hardly lose value. They'll always be in demand, and further on down the line, I'm talking from a long-term goal. If it was me for the next 10 years, let's say, and having those types of properties in my portfolio, I just don't think you can go wrong with them, really. That's where I'll be putting my money. Or I'd buy shed-load properties up north. Bradford was on the top.
Here we go. Now we're into the juicy stuff.
Bradford. So Bradford in postcode BD1, average house price there is £63,000.
Have you been to Bradford?
No, but I don't care. £63,000 average house price. Average rent, £750 a month. So giving you a top yield, average yield of 13.2%. In that area across the whole of the UK. So maybe I'll go.
I've got a question for the people of Bradford. Why are you renting at £750 a month if you can buy it for 60? This is what I don't understand.
I got a feeling they're not listening.
All right, and landlords of Brad, why are your tenants not just buying these places? What?
Yeah,
someone from the area. There's an agent here listening, watching me confusedly ask the question. Just answer the question in the comments. Thanks.
Yeah, cheers.
Well, I'm going to be a little bit different actually on because I thought about this while I was on holiday recently. If I was going back into buy a buy-to-let, what would be the next buy-to-let? So I still would love to, it's not a buy-to-let, it's not a property investment. I'd still love the holiday home, English South Coast. I still want that, but that's a different thing. But if I was buying one tomorrow, I would be looking at the big arse developments that are getting built in between towns. So there's a place called Sherford-on-Loddon, for example, that's kind of in between like Wokingham and Basingstoke, if you like. We've got a Jennets Park round here. These, not as much that, it's a bit more connected. But look at these big kind of 2,500 to 4,000 development unit sites that are going up or have gone up somewhere in and around where you are. You know, for us, it might be like Swindon or somewhere like that just on the outsides. And I would go to the developer and I would be finding out which stock units are left. So which ones, and by stock I mean which ones have got a roof on, kitchens in, that are sat there as almost dead money to them, with my 50-50 deposit scenario that I was talking about. And I'd be buying a 4-bedroom townhouse because I think I can strike a deal with the new build. The new builds these days are eco-friendly. I can probably get a green mortgage potentially on those, get a slightly better rate. The townhouse for a 4-bedroom on purchase price and pound per square foot is the best that you can get from a new homes perspective. The rental yield on a 4-bedroom townhouse compared to a 4-bed detached is not that much different, but the price is drastically different.
The rent, if you need 4 beds, you don't really care if it's semi or detached when you're renting, do you?
It's got a fallback option because it's got 4 bedrooms. If something went, if it went shit creek for all of us and you need somewhere to live, you just live in a fairly new 4-bed townhouse where you get yourself back on your feet. And I think it's safe enough for me to kind of almost plug it in and leave it alone because it's a new build.
Yep.
So, taking it right back to convenient, friendly, hands-off sort of investing.
Would you would you do a lease back?
What, on the show home?
Yeah.
Quite possibly, yeah. Yeah, if the option was there and the price was right, then yeah. I think there's a...
Because that's a classic dead money loss to the developer, which I think a lot of people don't know it's possible, is to go in and make an offer on the show home that the show home is going to stay the show home for the next 3 years. Well, the developer can have their money now if they want it, and then pay you rent.
I'll clarify in the location strategy as well, because I'm not talking about buying a new build that's a quarter of a mile from the high street or half a mile from the town centre, because you pay a premium for those sites because you're buying it for the location. What these other new sites are doing with 4,000 or 5,000 units going on there, in the first phase, you're not buying it for the location.
No.
So the developer doesn't get the premium. But 5 years on, after the developer's moved out and all the unadopted roads are adopted and the parks are up and the little commercial units have...
Just 5 years to get the roads adopted and the local shop.
Well, 5, 10 years, 20, depends what the developer is. But then you've actually got a community.
Yeah.
In 5 years' time, you've got a community.
Yeah, I'm being facetious.
I know what you mean, though, because it's a fucking joke. But in terms of actually building a public community, you've got the Facebook group, you've got X, Y, and Z that you need, then it's got its value. Mm-hmm. Even if the market's at zero for 3 years, that property's worth more in 3 years' time with that new build site not being a building site and being a community. So as you can tell, I thought about that a little bit, and that was where my mind was with it. I felt.
Can't forget Dubai either as an investment. That episode that me and Mike did recently with Joshua, who's an agent in Dubai, sort of opened my eyes up a lot to it, because I knew nothing about investment in Dubai. Mike, obviously, you've worked out there before as well, but just to hear about buying property off plan, then once it's complete, how much that is then worth straight away after it's all been complete.
That's an extreme version of exactly what Ian's talking about, is because you're basically reserving a plot of sand 10 miles from the city on the basis of when it's actually finished, it will be something.
It will be a thing.
And a community with the pools and the communal facilities are absolutely out of this world.
Yeah.
It's the same thing, but just on speed.
Yeah, it's the power of familiarity. Yeah. Because at the beginning, it's not familiar to anyone. It's just it's a meh.
Yeah.
But then when it's done all the marketing and people have drove past it
it's like,
1,000 times, all of a sudden it's like, oh wow, that looks cool. It's familiar to you at that point. It's worth more because of that. So yeah, exactly that. And you could probably say the same in a few other places. But and again, we talked right at the beginning of this episode of what Labour might do with landlords would depend on what they do with business owners. It might be more people. I saw the stat actually on that. Was it like there was a certain amount of million? I think it like 3x'd the population of Dubai in the last 10 years or something crazy like that. Was you were talking to him about it? I think on the clip.
Yeah, I think it might be since about 2000. Population's gone from 1 million to 3.
Yeah, that's bonkers.
That's mad, isn't it?
And they're still getting a sort of net gain of about 2% a year, which obviously the percentage is going down, but the number of people is still high. It's just the percentage is going down because they're now at 3 million. So it's ridiculous net migration of young, working age, healthy, driven people to do it. And I've spoken to a few business owners over the last few weeks who are looking at their options based on the outlook in the UK and the how receptive they are to having business owners and entrepreneurial spirit in places like I say, it's not the only place that's like that, but people are moving there in their droves, not for the gold rush that was there in the early 2000s, but because
Yeah.
it's a mature place. So
Yeah, well, you went back out, didn't you, recently, and said just totally different world. Like,
yeah,
it's a proper setup now. It feels like, you know, it could be a home to people.
less of a house of cards. Yeah.
Yeah. Interesting. Yeah, so that would be my kind of property. What about landlord advice? Like, what would be, you know, 150 episodes in, we've had so much good advice from people, from accountants to solicitors to coaches to property investors to estate agents in different areas to mortgage advisors. Like, we've had so many different people. We've had EPC people in, etc., etc. But what would be like the advice that you would be giving landlords now, September 2024? What's the advice that you're giving the everyday landlord that's either got one property looking to buy another, got two properties looking to buy another, or got cash in the bank and looking to buy their first? What would be the advice that you would give them at this point? Andy's looking at Mike, so I'm going to go to him.
No,
just to be an arse.
Normally you go to Mike first. But I mean, for me, it's more of what you know as a landlord. So I think, you know, my advice to landlords is properly educate yourself on all aspects of the journey, from buying property to what your long-term goal is to the end result, really, because I've heard time and time again landlords potentially not speaking to, you know, estate planners or accountants correctly, and with margins so tight on the finance side of things, you'd be crazy not to have an accountant that you can talk to and that can deal with the financial side of it for you, because they're there for a reason, right? They're the best people to maybe potentially take a bit here and put it into there, and sort of get round a few things. I think having someone like that in place would help you along with your journey and make it financially rewarding rather than financially tight and less rewarding, less motivated to actually go and invest in something else. I think the estate planner, I mean, we had Paul Hutchinson on, and we had to split that up into 2 episodes because the information that he was giving us was like mind-blowing. I mean, stuff that I never even would have thought of or never heard of before, and how you can take assets and put it into something else, and takes away that tax side of things and all of that. And I just think the majority of landlords don't have those type of people that they can go to. And I think with things getting harder, and potentially things coming into place further on down the line, that will make it harder for landlords. I just think having those experts, those power team around you. I mean, I've mentioned power team number of occasions now on nearly every podcast about having that power team there, and I just think that is my advice. Get that power team and use them when you need them, and go forward that way. Because if you haven't and you're trying to do it by yourself, there's so much information out there. You're not an expert in those fields, and you'll never know what you can and can't do correctly without having those people by your side. So yeah, that's my biggest advice.
The old classic: listen to the experts.
Listen to the
experts. Get some knowledge.
Yeah.
What about yourself, Mike? One bit of advice that you would give
just pack it up, buy a high interest bond, and lock your doors. No, in all seriousness, I think there's a change going on in the wider economy that we were talking about before we started recording. That just says what people don't realise is the middle class has only really been around since the Second World War. There was no real middle class before that period. So it's only in very recent history that our middle class of people have been around. So if you're in that space, you have the opportunity now to cement where you are, and cementing where you are for centuries has been by owning assets and property. So when we split and polarise further, as I believe, into the haves and the have-nots rather than the upper, middle and working classes, to make sure you're in the haves, you have to either own assets or business or something that generates for you Otherwise, you're going to be left doing the work of the people who do. It's a wide statement, and it doesn't just include property, to be honest. But property's a very, very big cog, as we all know. If you look at the Times Rich list or whatever, you've just got to look down the list. A lot of people made their initial money in business, but where their money is now is property. So it's not as if those people, apart from Elon Musk, I think, who just goes crazy every so often.
Just crazy.
No, I'm not sure I follow him on a personal level. People buy and invest, and they cement their place, don't they? So that's my part. What about you?
I think now's the time to be brave. I think that's the advice that I get. If you've been listening to this for the last 150 episodes, 75
Is that how many episodes has been? 150?
150. Should I drop that again?
Yeah.
I think
we should talk about it.
If you're someone that, has been on the fence and waiting to do the investment or to strike, I think now's the time to be brave with it. And that's the advice that I would give people in a really simple sort of summary way is do invest in something you feel comfortable in and just do it now. I would say is the best advice. And by now that might be in the next 12 weeks, but I think we've got an opportunity for a lot of business owners, landlords, people that are kind of 35 to 50. I think you mentioned landlords should be having a party right now a couple of episodes ago. I think there's an opportunity for landlords if they do it in the right way with the right amount of deposit. Rates are lower now. Sort of walked in here and saw like a 3.7 nationwide deals, throwing around there. So rates are lower now. Rents are still going up. You said maybe rents will go up 7% year on year. Inflation, no one can really argue with that because of the supply and demand scenario. And I think now's the time to be brave, go against the media narrative or everything, but strike now while it's sort of feels like we're at this point. Feels like we've been sat at this little bit. Maybe it's just starting to do that now. Get the summer holidays, boom. I think September and October will be quite positive months for sale agreed pricing. And I think as a landlord, you've got an opportunity over the next 4 months to strike. And I think if you hesitate and wait 8 months, you'll be thinking, I should have gone in September, October of 2024. So bravery. And as you guys said, have assets, not liabilities. Have good people around you. Absolute no-brainer. We've learnt that time and time again on every episode that we've done. Knowledge is power in this scenario, but you got to have the bravery to strike and go and do what you think you should be doing rather than just sort of hesitating on it a little bit. So that would be my advice. It's been crazy, hasn't it? 150 episodes. Did I mention that?
Yeah. Are we committing to another 150?
150. Well, 151 officially. But are we doing another 150 or is this the last one?
No.
Are we over? We've got a whole podcast set built for it.
It'd be a bit of a waste, wouldn't it?
There's a fair bit of tech investment that's gone into it. So I think it's fair to say we will keep banging these out every Friday for the people that listen. A couple of thousand people a month listen to these, and we appreciate that. We'd love more comments and feedback from people and topics to discuss and more engagement from our listeners. That would be amazing. We can see similar people come back, month after month and week after week, which is amazing. So, we'll commit to at least another 50.
Yeah, let's get to 200. That's the next step.
Get to 200. I've got a feeling AI is going to have more of an impact in 150, so it's going to be even easier for us to create these. We could have Elon Musk and Trump dancing here like AI's created recently. Who knows what could happen? It might not even be us.
No.
AI might just take it forward.
You never know.
But some good advice, some good thoughts. Love those kind of 3 questions. Back to the origins, it's been really good. It's been, I guess from our point of view, it's been something that we've been really fortunate to have these amazing guests. You mentioned the estate planner recently and some of the guests that we've had on, thanks to all of those as well.
Yeah,
and
absolutely.
Thanks to the future guests too that join us. So, until next Friday, 151st/2nd episode.
151B.
We're increasing it slightly.
We'll be back. See you then.